Verisk's Emerging Issues, your source for vital market intelligence on the evolving risks and opportunities facing insurers and risk managers that can help inform product development and strategic planning. Verisk's Emerging Issues.
Hi, and welcome to Verisk Emerging Issues. I'm your host, Catherine Lynch from the Emerging Issues team. Our guest is Laura Panesso, Assistant Vice President of State Relations here at Verisk. Hi, Laura. How are you?
I'm great. How are you?
I'm doing good. Let's dive in. So along with the national election in November, there were several state insurance commissioner elections. What can you tell us about the outcomes?
There were a number of state level elections in addition to the federal election, a number of governors as well as insurance commissioners. Speaking first about governors, there were incumbents reelected in Montana, Utah, and Vermont. And so we don't really expect any changes at the insurance departments in those jurisdictions. New governors were elected in Delaware, Missouri, New Hampshire, North Carolina, North Dakota, Washington, West Virginia, and Puerto Rico. They all stayed with the current party, but do have new governors. Indiana also had a new governor elected, but the commissioner there recently left for the private sector. So Holly Williams Lambert, previously the chief of staff, is now acting commissioner there. On the insurance commissioner elections, incumbent commissioners were reelected in Delaware, North Carolina, and North Dakota. And we have new insurance commissioners in Montana and Washington. So quite a lot of movement.
Yeah, that is. And in terms of the changing of the guard of these new Department of Insurance commissioners, what can you tell us about their priorities and some of the issues they might be interested in addressing?
Well, I'll focus just on Montana and Washington, where we know we have new commissioners. James Brown, the new Montana Commissioner of Insurance and Securities, actually issued a statement saying that I will build on the solid record of my predecessor, Commissioner Troy Downing, to promote consumer education and consumer advocacy, work to lower insurance costs by promoting competition, reduce the regulatory burden on Montana businesses, and hold bad actors accountable. So he's already kind of issued a mission statement there. The new Washington commissioner, Commissioner Patty Kuderer, has also stated that she supports the former commissioner, Commissioner Kreidler's proposed ban on use of credit. She reportedly has stated that using credit is unfair and discriminatory, and that the industry is going to have to prove to her the reasons for their using it. So it'll be interesting to see how she picks up on her predecessor's credit ban.
Additionally, some issues that we track on the Emerging Issues team were on the ballot in certain states, including marijuana, both for recreational and medical uses, and psychedelics. How those measures do?
So there were a number of ballot measures. Cannabis legislation measures failed to pass in Florida, North Dakota, and South Dakota. Interestingly, the measure in Florida had a majority yes vote of 55.9%, but the measure actually required 60% to be approved, so very close there. Two measures on medical marijuana passed in Nebraska with 70% voter approval, one decriminalizing possession and the other removing penalties for distribution, establishing a regulatory board, and allowing patients over 18 to obtain up to 5 ounces and those under 18 with parental consent. Massachusetts voters decided against a measure legalizing psychedelic drugs. Psychedelics are currently only legal in Oregon and Colorado. Unrelated to drugs, New York Prop 1 passed, which expands anti-discrimination and equal protection rights under the state constitution to include ethnicity, national origin, age, disability, sex, sexual orientation, gender identity and expression, pregnancy outcomes, and reproductive health. So just another important ballot measure there.
And is there anything else notable from the states, either in terms of new state administrations or Department of Insurance leadership changes that might be of interest, especially how they pertain to emerging risk?
Well, affordability and availability really continues to be a discussion priority across virtually all states, as well as at the federal level. Availability at one time, really not that long ago, had been isolated to risk-prone areas such as coastal and wooded regions, so think wind and wildfire. However, climate factors such as the increasing number of severe convective storms, hail, and flood have stretched availability in multiple states. And really, if the weather wasn't enough, economic inflation fueled by increases in material and labor costs, technology, and the rising cost of homes and cars has put upward pressure on premiums, possibly creating a near affordability crisis, at least in some areas. Insurance affordability is becoming a larger part of the home purchase discussion as well. And homeowners insurance rates have increased 46.3%, while repair costs have increased 35% just between 2019 and 2023.
And how does social inflation and tort reform factor into the affordability and availability discussion?
Social inflation, driven by increases in litigation costs, nuclear verdicts, which are jury awards of more than $10 million, and third party litigation funding, all contribute to an increase in defense and cost containment, which is just one more hurdle for insurers who are struggling to reach and maintain profitability. Florida actually repealed one-way attorney fees and prohibited assignment of benefits. Prior to the governor's signature on 2023 tort reform legislation, trial lawyers actually filed more than 280,000 lawsuits to get ahead of the pending attorney fee repeal. This really exposed the desperate need for reform. Impacted by the legislation, tort reform has led to a 56% decrease in lawsuits in Q3 2024 compared to their peak in 2021. And now Florida is starting to see some market stability as premium increases seem to be moderating. 49 homeowners filings in 2024 were actually for a zero or negative rate request. And tort reform, like the significant changes passed in Florida, is a critical step to reducing costs and premiums. Looking ahead, we expect a nationwide push for third-party litigation funding reform in 2025. Momentum is really already building there. NCOIL recently adopted a Transparency and Litigation Funding Model Act, which will likely inspire similar legislation across the state. We already saw disclosure requirements gain traction in 2024 with legislation enacted in West Virginia, SB 850, Louisiana, SB 355, and Indiana, HB 1160. And so far in 2025, we've seen legislation introduced in, among other states, Kansas, Nebraska, New York, North Dakota, and Oklahoma covering this topic. On the federal level, Congress, they might get involved too. Congressman Darrell Issa and Congressman Scott Fitzgerald introduced H.R. 9922, the Litigation Transparency Act of 2024, and they're really aiming to require disclosure of parties receiving payments in civil lawsuits. So we do see the push for transparency is clearly growing.
Thanks, Laura. Is there anything else we should expect to see in 2025?
So the advance in technology, including artificial intelligence, AI, which I'm sure we see all over the news today, has really renewed the discussion on unfair discrimination. Regulators are closely examining models and AI to ensure unfair discrimination is not inadvertently or otherwise embedded in the technology. Several states, notably California, Colorado, and the District of Columbia, are actively reviewing the use of AI. The DC Department of Insurance, Securities, and Banking, DISB, recently issued a report on an extensive data call where the results confirm differences in premiums are driven by differences in losses. And the systems insurers use to produce quotes reasonably reflect the policies offered to potential customers and are reflective of the sound risk-based pricing methods being used in the market. The report found a difference in premium between white and minority drivers. However, the report did not conclude the gap is based on unfair discrimination. To pursue greater equity, DISB is exploring further measures, including additional studies into claim differences among racial groups and reviewing rate criteria that disproportionately affect Black and Hispanic drivers. The department proposes to develop a, quote, balancing test to evaluate whether certain factors should continue to be allowed in determining premiums. In all, DISB has identified 6 next steps as a follow-up to their report. In addition, the NEIC's model bulletin on the use of AI systems by insurers was released in December 2023 and is intended to provide guidance to insurers. To date, 23 states have adopted the AI model bulletin, with Delaware and New Jersey the most recent. And other states have issued insurance specific regulations and guidance, such as New York Circular Letter number 7 on the use of AI and external consumer data. And we expect more states to follow. The NEIC AI Model Bulletin reminds insurers that the use of AI must comply with all applicable insurance laws and regulations. This includes those laws that address unfair trade practices as well as unfair discrimination. The bulletin sets forth a department's expectation as to how insurers will govern the development and acquisition as well as use of certain AI technologies. The model also lays out the requirement for companies to have an AI systems program in place, which addresses an insurer's process for acquiring, using, or relying on third-party data to develop AI systems or use AI systems developed by third parties. Insurers are expected to conduct their own due diligence in assessing the conduct and compliance of any third parties they do business with. Additionally, the NEIC's third-party data and models task force has been discussing solutions to regulatory issues with third parties. Connecticut is leveraging actuarial consultants to assist with reviewing models. Texas has updated filing requirements, mandating companies disclose all third-party data and models used, including the vendor data dictionary, as well as the company use of the information. Maine has allowed third-party modelers to file for department review of the model, and Pennsylvania has drafted rulemaking around unknown risk characteristics returned by third parties and used in rating. The next steps include surveying task force members on what third-party models and market risk members are most concerned about, and we anticipate more activity on this issue.
Thank you for walking us through these developments. Thanks, Laura.
You're welcome. Happy to help.
Verisk Emerging Issues, your source for vital market intelligence on the evolving risks and opportunities facing insurers and risk managers that can help inform product development and strategic planning. Verisk's Emerging Issues.